Okay, so for this video here, I will cover some of the blue chip large cap stocks, something I haven't done so far, although I do follow them. And I have my own little watch list actually, because I intend to buy some of them when I feel like the selling has fully subsided. Now, as usual, I have to start with the SPY and the NASDAQ. I'm not going to do the Dow and the Russell. It's the same sort of thing. I've covered them in my previous videos, and I cover them daily since I do daily videos now. So the SPY, it's on ascending support. So I think there is a chance that we should bounce a little bit. But then generally also we should come back down, test this low, since this is support for now. And then I think ultimately we're going to test new lows. But first there'll be a pit stop here at 370. So I also think the DAX is very weak, and I don't think it's likely to bounce much more from where it is. I feel like we're going to go lower, and at the moment I feel like the DAX could send everything lower. So I think that will put a bit of a lid on any rally we do get here. So SPY, very small chance of a bounce, and a bounce would be very weak. So 3-4% maximum, and then flush, and then new lows. With that said, I actually think there's a chance that we actually go lower already this week. So for the S&P, weak, although we are technically at support, pun intended. NASDAQ, same thing, but actually we're below the ascending support, and there's less support where it is. I think the S&P and also, the Dow and the Russell are also at support. So the fact that the three indices are at support could give maybe 1 or 2 days of sideways movement, a small bounce. That would also lead the NASDAQ to go up a little bit. Again, 2, 3, 4% max, and then back down to test, and then flush. So pretty bearish short term, medium term, long term on all the markets. Maybe very, very short term, a small bounce, but I don't think it's worth risking going long. I think if you are already long, you should be selling rallies, preferably at support. So, imagine you're long a particular stock that's related to the NASDAQ or the S&P. They all are, but very much related. And if it goes up, it depends what your time horizon is, your investment thesis, and it depends on a lot of things, like your leveraged, what currencies, all this stuff, what your hedges are. But otherwise, I would sell into it, maybe 20% here. If it goes higher, another 20% here, I would be another 20%. I would basically be looking to go all out. It depends how much you believe in what stock you own and for how long you want to hold it long term, maybe tax, maybe implications with taxes. If you hold a stock for more than 6 months, for example, you don't have to pay any taxes. So if you're 4 months into the trade, then you might as well hold it. Lots of reasons. It's all down to, individual responsibility, but very, very short term bearish. Now, I will move on to these, and I've covered this sort of short term outlook on all my videos. I do a sort of daily review. Now, here are the stocks I watch. I had a little comment from Alex to cover 2 stocks, which I will do. I haven't followed them very much. Although NVIDIA did make my list recently because it got crushed. I think that was some bad earnings or some bad news, which sent it down. Was it 7% one day, and the markets were weak. So here is NVIDIA. I'll get to NVIDIA in a second. I just want to cover some. I've got 2 sort of day trading stocks at the bottom here, which I didn't trade AMC, but I watched it. Bed Bath and Beyond, I did trade here, day trade down here for a nice move. That was a nice little day trade. Although actually it lasted 2 days, so it was more of a swing trade. But that's why these 2 are a bit special. They don't have the red mark on them. I'm not going to go through Bed Bath and Beyond. By the way, the CFO committed suicide 2 days ago over the weekend. So even more of a reason for it to flush. I mean, this is absolutely crazy stuff. Pure meme stock. a bit like AMC, very similar charts. And here you can see the ascending support, what happens when you lose it. And now the market's weak. So yeah, I'm not going to go through AMC and BBB. Why? They're not large caps. They're meme stocks. They're crazy. They're day trades. They're unpredictable, and you're just less likely to be able to trade it correctly. It's more momentum driven, very zoomed in day trading. So let's go through what I would call more established large caps now. Zoom and all these stocks here I made this list because they are to some degree established. They're not sort of pump and dumps, Chinese stocks that go bankrupt. They're stocks that you can be pretty sure you can hold them for several weeks, maybe even months, and they'll still be operating. And they've also made the list primarily because they've been obliterated. As you can see, Zoom, the lower you are in this list, the more of an inclination I have to buy you because you've been destroyed. But look, something that's been destroyed can always go lower. So, and Zoom looks like, I mean, if you just zoom in on this, oh, another pun, you can see, it's not exactly bucking the trend. It had a red day. Okay, it wasn't much. It was minus 1%, but the markets were also down sort of minus 0.5%. So what you'd want to see is something green. When the market's weak, but not incredibly weak, you'd want to see some green days, especially when it's this crushed. That would give the impression that it's looking for a bounce, or it will be strong on a market reversal. So Zoom, okay, long term, and you know what, Zoom actually I feel like is a good stock to own, because it made a lot of money. And actually I'm using Zoom right now, but it made a lot of money post or during the Corona period. So what was it, March 2020, really, when the lows were in, and you can see it had a crazy rise, comes all the way back down. And I don't know fundamentally how the stock is. I don't really care, but to me, it's probably worth more now than it was before Corona. And we've had massive selling. I don't care what the bad news is. You can see this drop down here. Obviously, this was some bad earnings or something, or some negative news to gap lower on a day. And what you really want to see for a reversal is, like I said, a green stock on a red day, but also like a sort of, and I remember some famous investor said this, where the stock opens red and closes green on bad news. So essentially a stock closing green on a red market and on bad news, that just suggests, okay, look, the selling is done. There aren't that many shorts left. All of the weak hands have sold, and now it's just sort of value investors, or just sort of scavengers. I don't know. Basically, the momentum has changed. That the selling is exhausted. I don't see that yet with Zoom, but it's possible. And you know what? Why not have a starter position? In fact, it's something I would maybe consider, a starter position. But I'm expecting the markets to go down so much that it doesn't matter how much something is sold, it can always go lower. This could go down another 20% in a week if the market starts to flush easily. I mean, it could easily get to 60 to low 60s. Just why not? I mean, everyone's used to going down. So I don't want to be vague. I hate that. I think the markets are going down. I think Zoom will go down with it. But if I was serious about buying Zoom and having a long-term position, because that's the only reason I would go into it now, I would enter it now with 10, 20%. Just throw it in there, whatever. It goes up, you make a bit of money, you probably be annoyed because you didn't buy more. It goes down, maybe you'll be a little bit annoyed that you bought and it went down straight away, but you'll be happy because it's only 20%. It's what I call the invincibility move. If you believe in something, then you just buy it, and whatever the direction, you're kind of happy, but you've got to have an overall thesis that doesn't change. That's my view on Zoom. And with that sort of background, I think I can apply that to a lot of these stocks. Peloton, what is it? The bike company. I think they I don't follow the news. I think they slashed their employees quite a lot. Normally that moves the stock up. I forgot they're doing something with their equipment, reinventing the wheel, literally. Um, but look, close, one of the worst closes, second worst close. The market is nowhere near its low. I think the market's going lower. Peloton has never been this low. It's, for me, very likely to keep making new lows. However, if you really believe in the stock, sure, buy a little 10% now. You'll most likely see your position underwater, but I mean, not a bad position not a bad place to start a new position. So that's Peloton. Alibaba. Now, Zoom, I kind of understand the business model a bit more. I would trust it more than Peloton, that I can say. But still, these are known companies. They make CNBC headlines every day, and I don't think they're going to go bankrupt. So it's not the worst place to park your money for a starter position, 10 or 20%. Alibaba, this one I like. It was destroyed early on. I mean, this is basically Amazon of China, and it's down 70. Well, right now it's 70, more than 70%, which is a lot. Again, on ascending support, this is a bit like the major indices, closed pretty bad today. 3.65% down is quite big for Alibaba. Now, Chinese stocks are not exactly favored at the moment because the US regulators are having a bit of a fight with these Chinese listed stocks. But look, if the markets go down, Alibaba will go down, quickly loses ascending support and get to the next support zone, low 80s, 81. But I quite like Alibaba. And it has a tendency to surprise. I mean, when the Chinese have this surprise rate cut, was it then? Just instant pop. And look at this. I wouldn't own it for the very long term. I would own it for a swing trade, but a nice 20% there. I would be more inclined to buy Alibaba now than any of the other stocks that I've looked at so far. So again, I think it'll go down with the market. It's weak, but it's at support, but it's definitely worth a nibble here. So that's my take on Alibaba. Also, I might as well cover some upside because you don't just buy something and hold it. You've got to have targets on the way up and on the way down. Where will you sell it if it's wrong? If it goes wrong, where will you buy more if it goes lower, if you don't intend to sell? But also, where will you sell? You need to know what you're going to do, whatever happens, so that you don't just freak out, stare at the screen, and just act on emotion. You've got to have a plan. And preferably, it's better to have these sell orders already in or buy orders already in so that you can go outside, go on holiday for 2 weeks, and hopefully your thesis is correct. And actually, my best trades have been when I'm not at my desk. It's when my good till cancel buys or sells have been filled, and usually I come back and I realize, wow, they were well placed. I did my homework quite well and I didn't act on emotion. And sometimes I feel like if I was at the desk and I zoom in on the candle, on the 1 minute candle, I realize, whoa, this flush might have freaked me out. Maybe I would have stopped out, or maybe I would have dropped my limit sell in. And then 2 minutes later, it's back up and it's rallied and done what you thought it would have done when you were doing your homework completely sober-minded on a Sunday afternoon. So a lot of these automated good till cancel orders are usually the best ones. So have a plan. Alibaba, I like it here. It's a good starter position. I don't own any. I wanted to, but again, I just have this I'm so convinced the markets will go lower that I'm willing to be greedy enough to wait it out. DocuSign, another one a bit like Zoom. This has already made new lows. This is not a good sign. If something makes new lows when the market is far from making new lows, the good news is it hasn't made total historic new lows. So at least you have some prior chart price action to go by. So after this, I mean, look, we're at a gap zone. So gap fill, maybe call it 48 without getting too technical about it. But I would say 48, 48.11 or something. I like my sort of odd numbers. There's this ladder theory where if you buy in increments of 5 cents, so 0.01, 0.06, 0.11, etc. I don't want to give too much away, but that seems to work quite well. I would hold off on this just simply because it's made new lows, closed at the lowest level in a long time, and it's in a gap zone, and the market hasn't gone lower and probably will. Virgin Galactic, a nice little ticker here. This has also been totally destroyed. I mean, that's the general theme here. I've already made this this estimate. I don't think it's accurate to start from here because it rose up and actually went down from here. And this is when the markets actually no, it's in January or late 2021. This has been destroyed for a while. It's Virgin Galactic. It made a nice bit of news a few months ago when Branson tried to do some tourist space PR stunt, which worked well, and then it just went all the way back down again. There's also rumors that it could go bankrupt. So it's a higher risk one. It's not like Alibaba or Zoom maybe. So it's quite risky, but it's green on a red day. It's all the way testing its lows, but not new lows. I think this is likely to outperform all the other ones so far. So if you think the market's going to bounce, this should do quite well. It'll probably get to $7, maybe just a bit above. And if you believe in it long term, I would definitely be buying here. Yeah, definitely. This is good price action for me. TDOC, another one of those sort of NASDAQ ARC, Corona benefiting stocks, a bit like Peloton and DocuSign and Zoom. This one, bad close, testing its lows, market's going to go lower, the trend is down. It could go low. I mean, at least you have some prior price action to go by. I would avoid, let me just move this out the way. I mean, yeah, if you really believe in it, you could start a position here, but you're very likely to see it go underwater. But that's the point, as soon as you buy, you're technically in the red. Even if the stock doesn't move, just the commission means you're in the red. So, if you buy, you're always going to kind of be at a loss immediately after the buy. So again, this is another one, a bit like a few of the others where I think it will go lower, but why not buy now? 10, 20%. I usually machine gun my way into trades and out of trades. So you can't make money without taking risk. And this is not exactly a stock that'll go bankrupt overnight. So a bit like Zoom and DocuSign and maybe Peloton, higher risk, but not the worst place to start a position. But again, very likely to go to new lows, especially with the market, the way I see it. Very, very probably going to go down also. Roku, I don't know much about this. I just know it made the news. This I would, yeah, a bit like the other one. They're all quite similar. So bad close, very good for people who want to start a position. You can see it's very close to prior support, not just here, which was the Corona lows before they printed money into sort of hyperinflation territory. I mean, every stock kind of had this reaction, but this one's pretty impressive. So you've got your March 2020 lows and also around this period here. So it could get just below 60. So 59. But why be greedy? I mean, your 63 is basically the same thing as 59. Okay, it probably looks bad. If you go down to 59, it's a 7% move down. So imagine you go in 10, 20%, you're down 7%, you're upset. It's the same thing. You're at the same price because one bounce and you're up 20%. I wouldn't buy here and then buy at 59. It's the same thing. So don't be greedy. And if you're going to buy 20%, and you think it will go lower, which it probably will, buy 10 here and then buy 10 there. But just agree on a certain amount you're going to buy at this level, because this is one level to me. The next level, you know, probably 40, and the one after that, probably 28, without looking too much into it. But again, this would all depend on the market. So Robinhood, don't like this stock. Very memey, but you know, it's kind of bucked the trend of the other stocks. It's nowhere near its lows. I just feel like there might be a bit of a ascending support. Yeah, it looks good. You know, it takes out $10, psychological, and a bit of a zone here. Support, 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 and then resistance, resistance, resistance. So I would say $10 plus the ascending. You've got a bit more to go with here, and then sell into the 11. Swing trade, maybe day trade. I don't know if this is the kind of stock anyone would believe in long term. There are so many other better ones to play by, but this is one of the stronger ones. If the market gets destroyed, for sure it'll go down, but you know that it's strong here. So it's kind of going to give you some support. So if the market gets crushed, so you could buy some now just randomly, let's say 950, and if it goes lower, well, it depends on your time horizon, how much money and all this, but I would buy again before it's, I would probably buy at 7. If the markets really are going to go all the way down and test their lows, then you could also buy at 7. So a little bit here, a little bit there, and then get ready for new all-time lows. If the market does that, you could always stop out. You could stop out a little bit. You know, there are lots of ways of trading around a position and still holding a long-term sort of core amount. You know, you could, for example, you could buy now. You could stop out if it, let's say it takes out $9, the market looks horrible. So you stop out, yeah, you lost a little bit there. And then you buy back here. And then you buy back there. So it went down, you lost a bit, but at least you bought your position, however much it was combined, at a lower price. So definitely worth it. But again, it depends on your thesis. But this is one of the stronger ones. Snap. Good news, bad news, sideways. It's again a bit like the Robinhood stock. Very memey, very NASDAQ driven. Not my kind of stock. Weak close. I think this could easily test its lows on a bad day. I mean, again, if you really believe in it, you could buy it here. If it flushes this, it will immediately get to the March 2020 lows of $8, which looks pretty close, but that looks like a bit of a drop too. 20%. That's maybe a bit too much. Yeah, and then another one. I don't know. For this one, I feel like you need to really know the company, because it's I mean, a lot of it depends on the business model, how profitable it is. It's not that unique. You know, you have so many of these little Twitter, Instagram, and Meta, and okay, they own each other. WhatsApp, but I just have a bit of a bias. Maybe I don't particularly like this stock, but I would probably buy it for a bounce. You know, if I see it go down to 850 and the market looks like it's going to bounce a little bit, I'd buy it just to sell at 10 or something. So yeah, nothing great about this stock. Meta, Facebook. Now this is obviously a big company. It used to be part of the FANGs. I don't know if it still is. Changed the name, got destroyed. This ascending line, to be honest, it's below it. I thought it would at least support it a bit more. And look at that, it's just really ugly close. And for Facebook or Meta, you'd expect a bit more strength if you look at some of the other stocks. So for me, a lot of people would probably take a core long-term view on this and think it's gonna gonna rally, and yeah, it probably will. That's a bit of an identified descending line. I like descending triangles. I think when you break out of it, it's one of the strongest, maybe the strongest pattern. So I wouldn't buy, I would probably buy on a breakout of this if the market looks strong. You know, you could sort of break out at, it depends. It's not just the price, it's the time. When does it break out? So, you know, if tomorrow gets really strong, it breaks out, it has to go all the way up to 170, over 170 to break out of it. But in a week, it can break out of it at 159, although it would very likely not achieve it at that price. But anyway, I would buy this on a breakout of the downtrend line. But I think what's more likely is that it goes down with the market, especially the Nasdaq, and you could probably buy it at 141. I think it needs a bit of a washout, a bit of a flush, and then a bit of a V bounce. But again, I think the markets are going down, so if I would trade this for a V bounce, it'd be pretty quick, several days trade. So yeah, either buy on a breakout of the downtrend line, or if it flushes, buy a bounce at the 140, 140-ish. You know, when it gets to 140, zoom in and look for a bounce. Have the meta chart on your left and have the Nasdaq on your right, and just watch which one is leading, and then just zoom in and buy whatever amount you want. But you know, if you're going to get it wrong, if the market goes down, it's got to be a stock you're happy to hold, and you've got to give some percentage move for the next buy. I mean, obviously 120, let's say 4-ish is the next buy, but how much of a move is that from 140? 10, 12%. You know, don't go in too much on each one, because this 10, 12% can be done in 2-3 days, especially in a real cascading flush. So, but yeah, that's Meta, 2 options to trade it. Netflix, you can see that's quite strong compared to the other charts we've seen. It's already sort of flagging up here. So you could see it found resistance at 246, where it opened from this probably bad earnings or something. Now, if the market goes lower and it loses 212, whatever the low of this candle is, it's likely to go, you know, lower, sort of down to 200, maybe go sideways, and then back to 180, especially the market's going down. But a bit like what was it, Space? No, it wasn't Space, sorry. A bit like one of the other stocks that we were looking at. Robinhood, I think it was. You can see it's nowhere near its lows like the others. So, but the others are just really weak because the Nasdaq and the SPY are not near their lows either. But all that to say that this is relatively strong, but the last candle and what I think the market's going to do means it will inevitably go down. If you believe in Netflix long term, you could buy a little bit here. I wouldn't though. I wouldn't. I just wouldn't, basically. I can't explain why. I feel like this is a bit of a head and shoulders. This is the left shoulder, this is the head, this is the right shoulder. Big red candles, relatively big. So one bad day and you can buy it at 200. So I would get a bit greedy on this one and think you can buy it lower. Plus, with my bias of what I think the market's going to do. So Netflix, relatively strong, but still you can get it cheaper, even for a startup position. Intel, very strong company, awful chart. I mean, the chart's okay, but just has been so weak recently. Look at this. I mean, it's weaker than even these pathetic stocks down here. And Intel is an established company. I need to zoom out on the weekly. There's been a bit of chop around here. Its losses are sending support. There's not too much support. I would say the 30 zone where it is now, actually, although it closed at the absolute low of day. You can see if I zoom in on the 3 minutes, look at that, it closes there, flushing this 30.5, whatever it is. So very weak close. It's an interesting one. 28 is a zone, 30 kind of. I think between 28 and 30 is kind of a zone. So next is 25. I think a lot of people would have a long-term view on this. But it's just with the markets going where I think they're going to go, and with such a weak close and no support, I think this one you leave for a while. I think this would find support over several days. No need to catch the falling knife. Sometimes they say there's a 3-day rule where, let's say this is day one, although you could say any of these days are day one, but let's say I'm looking at it today. Tomorrow, it's probably going to go lower, but where does it close? Maybe it closes above 30, maybe above 31. If that's the case, I'd give another day, and then yeah, I would give at least 2 more days. You'd want 3 days where it stops going down, where it sort of finds a level in the middle of no man's land, and you should watch the market it's associated with, which is the Nasdaq. The good news is that you've also got a bit of prior price action to look at, and again, I think you've got a bit of support here between 28 and 30, and then later at 25. And it's also very well established stocks. I don't know what's going on with Intel. Maybe AMD's taking up the market share. I don't know. I'm not too much into it. In fact, I'm not at all. But obviously it's a very well established company for a long time. So I can imagine a lot of people sort of scaling into it and trying to establish a long-term position. It's an interesting one. Just wonder where it will find support. Probably 25. Just how much of a move from here? 16%. Yeah, well, that would probably only happen with new lows being tested in the market. So yeah, I'd probably, if I really wanted to buy this, I'd probably buy some right now and then leave 10 or 20% room for the next buy. Or if you really think that 28 might be the low, then just whatever you're going to buy down here, buy half of it there and then buy the next half there, which means by average you're in at 26 or something, which is the same thing. So I'd machine gun my way in very calmly here and look away for several months. 25 next, 20 next, 18 next, 12. Okay, DraftKings, another crazy stock, although that rallied a lot since the breakout. This really did outperform the SPY when the SPY did its 20% move recently. I mean, this was basically 100% mover. Comes all the way back to test prior resistance to become support. So where is a buy? Now is a buy. If the market goes down, I think this is a bit of a buy. I don't see this going all the way down, new lows. I see it going all the way down, testing maybe. So I would buy now where it is. If the market goes down, I would actually buy again here. Maybe I should use this circle. So where it is now is good. And then by the time it goes to its new low, maybe 1 or 2 days later, if there is a crash, you can buy again there. And if it starts to go even lower, then you've probably got a market crash coming. Do you want to sell? Do you want to sell all? Do you want to sell half and then buy back here? Sort of trade it on the short side whilst keeping an overall long position. Lots of ways of trading a position, especially if you're a long-term believer. But I mean, look, very good support. You can see why it held here and the breakout. I remember seeing it break out. I was already in other stocks for this breakout, but this was actually lower on my list. I'm kind of upset I didn't get it. I was in PayPal at the time and I got out at 88 and it's still higher, so I could have done better in DraftKings. But yeah, this is a good one to trade. I would actually trade this one over the others, even though it's not lower according to its own chart. It's stronger. It's more likely to go up when the market goes up. You're more likely to make money trading this than the others. So actually, even though the chart isn't as disgusting as the others, I would actually move this one up. You see what I mean? I mean, Zoom is more destroyed. You can make more money if it goes up, but DraftKings is more likely to go up more on a good or a bad day than the others so far. Probably some of these need to be rearranged in the order. It's just this one stood out so much that I thought I would do myself a favor. PayPal, this one a bit like DraftKings. I bought it on this breakout. Again, you can see why I like the downtrend line breakout. It's perfect. Broke out. I mean, look at this day here. It breaks out. It just opens at the low, closes at the high, and then it just grinds higher, higher, higher. And I think this was news. It was some buyback, some very good news. And you could, I was out already. I think I was out. Yeah, you can see why I got out at 88. It was prior resistance here. Don't get too greedy. And then the next day it just has good news. It really pissed me off, but you can see how good news is overrated. Just sold, and actually at pre-market, I think it was at 120 on that day. I forgot what the news was. It was pretty good news. And when I saw it open all the way down here at 100 rather than where it was at pre-market highs, I thought, yeah, good selling for the people who did it pre-market. I probably would have sold in pre-market, maybe not all of it, but it kind of signaled the top, and it never really took out the high from the day it opened, and now it's just filling the gap and whatever it might just. But this is also a pretty strong one because it's outperformed the others, and there was some good news. So where is it a buy? It's a buy where it is. I mean, look, you've got another green day on a red day. It's filled the gap. It's also filled the gap at prior support / resistance. So it's a buy where it is. And then the next buy zone would be probably around here, above the low, maybe the low. But if it's testing the lows, it means a market rout is happening, and you might as well just, I mean, look, you just bought here, 76. Why would you buy it? 70, such a small percentage move. And the reason for it going down is probably a total market crash. 10% is nothing in a market crash. So I'd buy there, and then I would hold out and just watch what the hell's going on. Next buy zone would be God knows. I just have to watch the general market. Maybe 40, maybe 50, a nice number. So that's PayPal, NVDA. So this is one of the stocks I was asked to look at. It's a very good stock. Very good company, sorry. The stock usually is quite good too, but in this case, it closed red, but the market was red, so you can understand. However, it did close below all the prior other candles. Not a good sign. I know it had bad news here, sort of, was it bad earnings or something? Probably on this day here with the gap down. So the thing is, since this bad news, and I think it was bad news, was so recent, you can't expect it to turn around so quickly. So if the market goes green, yeah, it could go back to 139. It may even fill the gap at 149. But for this, I think you need the market to be bouncing strong. Yeah, 10% move. That'll be pretty impressive. I think the market would have to be very strong for it to be there to go up to there. I think you sell that, especially if you bought down here. Well, let's look at the resistance on the way up. Let me get rid of this. So yeah, okay, 139. I'm not gonna put that in. It's too close and the circle will ruin everything. 149, gap fill. The next one, 169. I like these odd numbers. It works. Like if I wanted to sell 170, I would sell 169.89. 177, 169. Yeah, I would machine gun my way out of this one. Yeah, I would machine gun my way out of this one. I would sell What's this? 167. All right, I would sell 167. And by that, I mean 166.89 to maybe 169.49, a small amount. I would then sell this zone here. Let's call it 178.49. I wouldn't go for 179. I'd make sure I'm out rather than just miss it by 2 cents. And if it even goes higher than that, I'd be all out way before 190. I'd be all out by then. I mean, what are the chances that this thing just goes all the way up, it keeps going up, never comes down, and just, and then obviously, if for some miraculous reason it goes higher than that, I mean, what a sell zone this is. It was prior support here, but if you really think about it, it's this area here. I mean, the market's never going to be totally accurate, but prior support, it's probably really 200 to 210, 205 to 210, but whatever, sell below, make sure you're out. There's no difference. To me, if you're in, these are the sells on the way up. So sell, it depends how much you believe in it. NVIDIA, you probably believe in it quite a bit. It's a good company. Sell 10% here, sell 10% there, 10% there, 10% there, and more here, 20% or whatever, maybe a third of what's remaining. By the time you're up here, you're kind of more than half out. And chances are very likely it starts to go down. Maybe 100% out, it depends on the person. That's easier to say though, because that's on the way up. It's very nice to sell on the way up. If you're in now, not the worst. I mean, I think it will go lower because it's had bad news. It's closed at lows. The market's going to go lower, but certainly not a bad place to own some NVIDIA. I won't buy a circle because let's just assume we bought there. Next buy zone to add 1, 2, 3, 6, 1 between 1. Oof. I would say 124.51. But you know, zoom in if you think the market's bouncing and you're gonna miss it, just buy it. There's no difference between buying at 123 and 126, but I would say 124.51. But then again, if you just bought some there, it could probably get there. 6% move, yeah, it could easily do that on one bad day, and not even that bad of a day. That would be a bad day, but yeah, that's one zone. The next zone is 118-ish, 116 to 118. But if you're buying at 124, yeah, I would buy, either you buy one decent amount here or whatever that amount is. Let's say you want to buy $10,000 worth, you could make this 5,000 and then have the next 5,000 there. And if you think it's not going to go there, we'll just buy the next 5,000 wherever it is. I mean, your commission's going to be very low, like $5, $10, who cares? So I would try and split the next buy into two. For this area, 12451, and then for this area, let's call it 117 or 11651, 117, let's say, maybe even 118. So if you own some, not the worst, likely to go down in my opinion. This is your next buy zones. In, then don't touch it. Next zone is probably 99. Okay, call it 100. 100.11. I like that. And by then it's really down, because the thing is, this is a good stock and everything, but March 2020, I think the stock market could even get to March 2020. And look how low that was. And it's not that it was very low, it's just it had an incredible rise since then. And things that go up a lot go down a lot, even if they're good stocks. So buy these two areas and then hold out 100 and then 81. And then just turn around, go on holiday for 6 months, because this will probably do a nice move. I'll probably look at that. Probably put an alarm on this if it goes down here. So that's NVIDIA. The rest of the stocks aren't worth going through. I will finish with Tesla, which was the other one I was asked to look at, although I'm going to leave it up here because it's not the kind of stock I want to buy, so it doesn't make my list. Why? Because it hasn't come down enough, and I don't think it's the kind of stock that deserves to be this high up. For me, Tesla is a bit like some of these other ones down here. It's kind of a meme stock. It's not got the best balance sheet. It's kind of risky, so I think it's totally overpriced. Although a lot of people have said that and just been slaughtered shorting it. I actually have shorted Tesla before and I got lucky. I forgot where it was. I did short the top, although I think it was 880 before it did some reverse split. I got lucky on Tesla and I didn't make that much money, but I did short it and make money. So I'm quite happy about that. Now, okay, I've drawn these trend lines, but we're far from touching any of them. If I had to buy this, I wouldn't buy it until we go down here. Let's say low 220s. I think it could easily make that. Tesla moves quite a bit, so this is not impossible. 20% move could be done in like 4 days. So I would buy here. You can see it's, okay, this doesn't count as much, but it's ascending. General area of support. I mean, you could buy 221, it goes all the way down to 209, and you're still kind of within the same ascending support. So you've got to buy the range here. If it starts to take out 207, especially a few days later, so let's say we start going down, it tests, it goes sideways, market bounces a little bit, and it starts to lose 20, let's say 205, just to be sure. And by then the candle is here, we've lost the ascending support, we're below this candle. We will immediately go to 180s. So the next buy after this, give it a few days later, would be here. Again, depends what the market's doing. If we're in full-fledged recession, interest rates going up, just total collapse, Lehman style, DAX is dying, Europe is just freezing. I mean, you really think Tesla's just going to chill around here? This would be a massive head and shoulders, one shoulder, big head, another shoulder, and then we're talking about a neckline break. This would be pretty significant, losing 180, whatever it used to be before the split. If this goes, I mean, there'll be quite a bit of buying around this area. I don't know if it would just chill at 167. No, it would totally lose 167. It would go, you'd probably have a gap fill here, 140. Sorry, where was I? Yeah. There's not that much other ascending support. It's really a bit of a no man's land. By then I would say here, this sort of zone, which used to be ascending support, I think. You can tell this one, there. But yeah, I'd be buying this zone here. And again, this is an area buy, what I call area buy. I wouldn't touch this for, I mean, if Tesla is flushing this zone, either something's really wrong with the company, like it's been exposed for the debt and lack of sales that it has. I mean, the market share it's got compared to the other automobile companies is kind of absurd. If it starts to lose this zone, then probably down to 100. Why not? Psychological. I don't think there's any point in looking further than that, because if we're below 100, I mean, the whole world will be looking at the stock, and it'll probably be bouncing quite a lot too. I think at that point, you're going to be looking at resistance. It'll bounce, and that's what you should be using to sell. You sell into it. You don't just hold because, oh, if I sell now, I technically lose money. Nah, you sell because it's going to come back down and you can buy back what you sold. So you got to trade your way out of the stock. And you can even, so many times I've been underwater on a position, I've got out in the money. And you look at the stock chart, it's just down, 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 but somehow I got out, either losing very little money or actually making money. And the only way I did that is by trading around the position, just selling the pops, buying the drops, selling the pops, selling hard, and that's kind of where I got my knowledge or experience trading. So yeah, that's Tesla. Oh, on the way up, of course, if you go up, okay, obviously you sell this. Yeah, might even sell. Yeah, 300 is also psychological. So maybe this is a bit too big. So I would do two sells. Whatever you plan on selling, sell twice. I would sell 300s, and by that I mean 299.89, because it's the same thing. And maybe there are loads of sellers at 300, so you never get hit. And then the market goes all the way back down and goes all the way down here, and you're back at 220, and you missed your 300 sell by 11 cents. So sell at 299.89 or whatever number you like, but under 300, please. And then sell here. Again, below where all these wicks are, I would say that's I don't know, 312.89. Again, I like my 89. So out. If you wanted to sell 10,000, sell 5,000 each. That gives you an average of 10,000 at whatever this is, 307, let's say. If it breaks out, then please sell wherever the chart will be when it hits its head here. So maybe it happens early, maybe it happens then. These still remain the same because these are horizontal trend lines, but this descending one, it will depend on the day it happens. So if it happens immediately, it'll be here, 350. If it happens in 2 weeks, it'll be 340, 339. So that's why time period also counts. It's not just price. So those are my 3 sells on the way up, and these are my buys on the way down. I think you understand the logic. Anyway, this has been a very long but fun video, and a bit different. So I hope you enjoy. I'll try and tag some of these. I hope you appreciate that. Alex, that was for you. Don't stay up too late watching it. All right. Thanks a lot.